A pivotal moment for crypto regulation unfolded last week as the U.S. House of Representatives passed three major bills aimed at defining and governing digital assets. The Digital Asset Market Clarity Act, the Genius Act, and the Anti-CBDC Surveillance State Act each targeted a different slice of the crypto world, but together they could fundamentally reshape how crypto is handled in the U.S. The Clarity Act is perhaps the most consequential of the three, drawing a line in the sand between what qualifies as a commodity and what falls under securities law. Under this bill, decentralized networks like Bitcoin would be regulated by the CFTC, while the SEC would oversee tokenized securities. It also mandates stronger protections for retail users by requiring fund segregation and better disclosures. The Genius Act, meanwhile, hones in on stablecoins, setting reserve requirements and annual audits for large issuers, laying the groundwork for a regulated and reliable stablecoin ecosystem. Ripple's RLUSD is poised to benefit from this clarity, and industry experts believe this could lead to a $3.7 trillion stablecoin market by 2030. Then there's the Anti-CBDC Act, which blocks the Federal Reserve from issuing a digital dollar to consumers directly. This bill reflects growing political resistance to centralized digital currency systems, with lawmakers voicing concern over surveillance and civil liberties. It passed with a narrower margin, but is likely to be tucked into a larger defense spending bill, making its way to law through a back door. What's next? The Genius Act looks likely to become law soon, while the Clarity and Anti-CBDC bills now face the Senate. Though there's strong Republican backing and support from industry, Democrats have raised concerns about political motives and loopholes tied to Trump's own crypto interests. Sonic Labs unveils Spark, an AI-driven platform that allows anyone, even those without technical expertise, to create full-fledged, decentralized applications just by describing them in plain language. This is a game changer, especially for entrepreneurs and creators who've had ideas for DeFi apps or NFT platforms, but lacked the coding skills to bring them to life. What sets Spark apart is its full-stack coverage. It takes care of everything: front-end, back-end, smart contracts, and even hosting. The AI engine behind Spark adapts to user feedback and runs built-in security checks to catch bugs or vulnerabilities before an app goes live. For a space riddled with hacks and exploits, this level of built-in safety could be crucial. It's also a win for real-time debugging, which allows creators to tweak apps on the fly without deep technical knowledge. Spark is still in its early stages, but interest is already building. With crypto AI projects seeing over $1.4 billion in investment so far this year, Spark is arriving at the perfect time. It opens the door for rapid experimentation and lower-cost innovation, lowering the barrier to entry for developers and democratizing access to the blockchain. XRP surged past its previous all-time high to hit over $3.65, jumping 15% in just 24 hours and clocking more than 40% gains on the week, far outpacing Bitcoin. XRP's market cap now stands above $200 billion, making it the third largest crypto asset once again. But this isn't just a speculative pump, it's tied directly to regulation and policy shifts happening in Washington. The rally followed the House's approval of the Genius Act, a key pillar of Ripple's stablecoin strategy. The act establishes clear rules around stablecoin issuance, audits, and reserves, rules Ripple has already been preparing for with its RLUSD product. That clarity gives Ripple a significant first-mover advantage in what could soon be a booming regulated stablecoin market. At the same time, news broke that former President Trump is considering an executive order to allow crypto and other alternative assets into retirement accounts, potentially unlocking $9 trillion into the U.S. 401k market. All of this paints a bullish picture for XRP, especially as Ripple's long-standing battle with the SEC looks to close to a settlement. If that wraps up and an XRP ETF eventually gains traction, we could be looking at a whole new chapter of institutional capital flowing into the token. PancakeSwap recently crossed $2 trillion in total trading volume, driven by a record-breaking June where it processed $325 billion in trades. That's a staggering 88% increase from May, and it helped set a new quarterly record of over $500 billion in Q2 alone. What's behind the surge? A series of technical upgrades rolled out under the Infinity upgrade played a big role. These included support for advanced trading strategies, reduced gas fees, and new liquidity pool models that cater to both everyday users and institutional-grade traders. PancakeSwap Schwab also introduced cross-chain swaps, letting users trade across Ethereum, Arbitrum, and BNB chain without bridging, cutting down the friction and risks that used to plague cross-network trades. User growth followed suit. The platform saw over 7.4 million unique users in Q2, with strong performance across all major chains it operates on. Even on Base and Arbitrum, relatively newer deployments, PancakeSwap is pulling in tens of billions in volume. On BNB chain, it remains the undisputed leader. MEI Pharma, a publicly traded biotech firm, has gone all in on Litecoin, announcing a $100 million investment that makes Litecoin its primary treasury asset. This move marks the first time a traditional healthcare company has adopted Litecoin as its reserve currency of choice. The funding came through a PIPE deal led by Titan Partners Group and GSR, and alongside the investment, Litecoin creator Charlie Lee is joining MEI's board of directors. The company says it's pivoting towards blockchain and DeFi, aiming to become a pioneer in integrating crypto into biotech finance and operations. Lee described Litecoin as fast, secure, and decentralized, qualities that apparently aligned with MEI's long-term treasury strategy. MEI stock surged over 80% in pre-market trading following the announcement, with volume spiking far beyond historical averages. Charles Schwab, one of the largest financial institutions in the world with over $10 trillion in assets under management, is preparing to roll out direct spot trading for Bitcoin and Ethereum, according to Bloomberg. The move, confirmed by CEO Rick Wurster, is expected to take place within the next 12 months, pending favorable regulatory developments. Schwab is also exploring launching its own stablecoin, hinting at broader ambitions in the crypto space. Schwab has been laying the groundwork for years, but with the U.S. regulation finally catching up, the timing now feels right. The firm reported strong quarterly earnings, and Wurster believes crypto could become a significant growth driver going forward. What makes this important is who Schwab serves: traditional investors, retirement planners, and mainstream asset managers. Once Schwab integrates Bitcoin and Ether into its core offerings, crypto becomes far more accessible to everyday investors, especially if tied to existing brokerage or retirement accounts. And if a Schwab stablecoin does launch, it could compete with big names like PayPal and Circle for payment and settlement dominance.